Hi, good morning. This is Way. Today we are going to discuss the basics of trading. It's a very simple. You buy when you expect the price to go up, and you sell when you expect to be decreased. However, the implementation is not necessarily simple. In online trading, emotions play an important role. Many people are afraid of losing and therefore keeping their loss open for too long. In the meantime, they are also afraid to lose their winnings, which means that they close to the position at the small profits. Small profits and it is the smart to do opposite when you are trading. It is better to cut losses and to allow profits to continue. Therefore, always ensure a favorable ratio between risk and return. For example, if you can only lose up to $20 in a position, this it is advised to close a position with a profit of $30 to $40. That why you must get it right. Less than 50% of the cases get a good result. Or is the what is the basic or best way to the practice? Good questions. You must practice a lot. Trading is a skill you do not learn from books. Of course, you can learn aspects of trading, such as technical and fundamental analysis from a book. However, only theoretical knowledge is not enough. Therefore, it is an important to practice. Often try out different investment methods, and these, if you manage to achieve a positive result. You want try to online trading yourself, then open an account with online broker and try out to the possibilities. We have listed the list parties for you. There is another, I have another questions. Everybody maybe having a question. How do you become a good trader? It's a very important for us. After you have read this article, you will know exactly how to get started with online trading. But of course, just trading online is not enough. You also want to achieve a good results. In this part of article, we look at what you need to consider when you want to make a money from the trading. Follow the trend in many industries. It works well to be opinionated. Artists make more money when they create something unique, and as an entrepreneur, you better come up with an original plan. Unfortunately, when you start trading, this works a little differently. If you want to get a good results, it advised to create with that trend as much as possible. Creative is therefore often not beneficial. Investors sometimes say that the trend is your friend, but by buying when you price are merely raising and selling with the price are merely falling, you greatly increase the chance of success. To break on occasion, take a break on occasion. Similarly, bored man is not the trader's enemy. It's better not to have a position at all and to lose a lot of money when it is a nuclear that is sorry for. There is some mistake one. It is unclear where the market is going. It's better not to act. But even there is a lot of uncertainty in the market, sometimes it's better or wait and see, for example, think of the central bank announcement of interest rate. Risk-taking positions at such a time is more like gambling than trading. Have a plan. The best traders understand they need a plan to deliver good results. First, determine the amount of money you want to trade with. This is your corporate capital. Based on this, you can determine the size of the position you can take. If you want to act wisely, you set fixed percentages which, with which you trade. For example, risk no more than 2 or to 5% of your total invest capital on a single trade. This will prevent you more. This will prevent you more uh, from a losing amount in your trade account when things go well. It is prudent to the stop trading and avoid your performance. Be critical of yourself and make sure you always trade profitably on the long run time. Where is I have do not get cocky. Or is where we're using is a cocky. The synonym is are going to boastful. Someone self-assured is the meaning of the cocky. Everyone seems to want to have an opinion about everything or equal matters, the climate or future of the European Union. Everyone is an expert these days. As a trader, it is better not to have an opinion, do not act based on what you think is a good or bad. The stock market often participate good news or bad news. When you do, when good news is expected, the people start buying share as soon as the news is presented. You see that many traders take their profits, which can cause the price to fall. It is not about your opinion, it is based on actions of the large groups of the traders. And here is some different criteria to make, if you want to act wisely, you fix the percentage by which you trade. Example is no more than 2 or 5% of your total invested capital in a single trade will prevent you from losing the full amount in your trade account when things go well. It is prudent to stop trading and evaluate your performance. Be critical of yourself and make sure you always trade profitably in a long time. Thank you so much. Today we are going to end our session. Hopefully you have enjoyed my session. In next session, we will continue regarding the trading and their other question regarding the rules of the trading as a profession. Thank you so much. Have a good day. Bye bye. Stay safe.